right, you ready to rock? Excellent, Craig. Thank you so much for your patience. Really appreciate it. With that, I'm going to introduce our final speaker of the afternoon. We have Craig Klemmer. He is the Manager of Thought Leadership at Farm Credit Canada, FCC. His insights guide corporate strategy and identify opportunities where FCC can influence change to help the agriculture and food industry maximize its potential. In addition to acting as an FCC spokesperson on forward-looking opportunities, Craig provides industry commentary through blogs, white papers, and social media. Please join me in thanking and welcoming Craig to the stage.
Very good. Okay, well, thank you very much for having me. Some really good conversation before, and really interesting always the equipment market, and lots of change happening there. Just trying to get myself oriented here. I think I got a clicker. And thanks for sticking around. I know it's the very end of the day and people are busy. I just walked over from the hotel. I noticed the bar's starting to pick up a little bit. So really appreciate people taking a bit of time out of here. So I want to talk a little bit about productivity and why it's so important when we think about agriculture or planning and where we are, and link it to innovation and kind of the challenges that we're seeing here in agriculture, and maybe the opportunities that we see in agriculture relative to the overall economy. But this isn't something that we're just talking about in ag. It's a topic that you're hearing Carney talk about, the federal government, and not trying to get political, but we're seeing this conversation happening not only in Canada but around the world. So just kind of want to set the stage about what we're seeing, why this matters, and I think it's a bit of a shift that we need to start thinking about. And the presentation, Ray was talking a little bit about all the neat activities and investments that are coming out, and it kind of links that together about why this is important. And agriculture is really at a foundational spot to really drive some of this growth, drive some of the improvements that we need here in Canada, whether it's going to be employment, whether it's going to be overall just GDP growth, but just getting us out of some of the slump that we're in as a country here overall. So try to paint the picture of where we are and how we got to get there. So, if we kind of look at a lot of the news articles that we see around here, lots of negativity. You look at the Canadian economy overall, you think about the job pictures, unemployment is increasing. We kind of see the start of the year has been a little bit sour. Trade tariffs are coming into play and really impacting how we are sitting overall as an economy. And these things are coming through and creating some challenges where we see ourselves just in general. So if we kind of paint that picture, where we are and where we're going, you guys are feeling this, Canadians are feeling this. When we think about the cost of food, we think about just the cost of living and how we don't feel like we're getting ahead. And if you just kind of look quickly here at GDP growth in Canada and how that's compared to some of our peers, you see the United States, they're doing slightly better than we are in Canada. Obviously the spikes and troughs that you see out of COVID. But when you compare it to our peers in the G7 countries, we're kind of in par, slightly better, but overall the picture is kind of this stagnant, sideways moving beast that we have here, and a lot of this has been driven by debt and kind of helping to try to grow the economy with not a lot of success there. We hear this story about how Canadians just aren't feeling it. We're not feeling that we're getting ahead. Actually, we feel like we're falling behind. And I think this is one of the stories that really shows here. This is an article that came out of the Globe and Mail, but it really look at GDP on a per capita basis and how we're comparing against OECD countries, so the developed world. And you can see how it's been a kind of a constant decline. And over the last 10 years here, we've seen that purchasing power, that GDP growth perspective of ours, decline about 10%. So it really speaks to these challenges. They're quite real that people are feeling, and overall that we're not feeling that confident as a starting spot. So, kind of bringing this up from the very top level down and why this all matters to us and what the opportunity is for us in our industry. If you look at the employment side of things, things haven't been trending the best either. We look at just kind of sideways trending here. Unemployment in agriculture and food industries have been increasing as well, despite the number of unfilled jobs and people not being in the right place. I'm only showing to the end of 2024 because we didn't have the annual numbers yet. But for 2025, at the end of December, we saw this increasing a little bit more. We have about 6.5% unemployment. So when we think about that picture, we have higher costs. We're not really getting the wage growth that we were hoping for. Overall number of people that are looking for jobs increasing. You know, you're kind of seeing all these stories coming together, and people aren't feeling that great. So this is really what it comes down to. Where are the opportunities? Where's the spots in Canada that we can really help drive this? From both the size of the economy in terms of GDP, as well as the number of jobs. And one thing that I like about this, you know, you don't want to undersell the story. Us in the agriculture and food space here, we are one of the largest opportunities in the overall economy. And so this is really important. If we kind of look at where we are in terms of driving GDP, we're one of the largest pieces. Often we talk about the oil and gas sector, very important, but the size of the agriculture and food sector as itself is equal in terms of size when it comes to GDP pieces. When we start looking at jobs, we really shine. Now, I will put a caveat on this. A lot of these jobs are retail with food services and grocery store, but it does employ nearly 600,000 Canadians. So as an opportunity where we need to invest, the story needs to start coming towards food and agriculture, and that's why this industry is becoming more front and center to the story. So this is all just kind of context of where we are and where we're going, but why is this all important? My clicker's not going here. Sorry, just so we kind of look at where we are. This is that 10,000 foot level. There's lots of things that we're seeing in agriculture right now. So it's, you know, we're seeing a lot of challenges right now. Trade disruptions are really coming into play, and these are causing a lot of problems and uncertainty. They're really challenging whether you should be making investments, what should you be investing in, where are those opportunities. Profits are coming down as a result of this, or just margins in general. People are feeling the squeeze. I know the cattle industry, if you're a cow-calf producer right now, things are pretty good, but there's a lot of uncertainty that's coming through with that. These high cattle prices, although they're helping improve the bottom line on the farm level, we see the feedlots, we see the packing industry. A lot of those are really struggling, not because of the price of cattle, but the volume of cattle, and not able to put those costs out over time. So these are some major challenges. Crop prices are declining, uncertainty about markets, people aren't really willing to bid them up, and this on again, off again kind of tariff perspective is coming into play. And then what we do see is this is creating a lack of investment, and I want to go through that story a little bit. You know, both at the overall industry from a government and a regulatory and investment perspective, but then also from the farm level. Conversely, what we do see is these opportunities. You know, there's a lot of data out there, there's a lot of economies of scales, and we'll get into those, but there's some real opportunities in agriculture right now, and we hear all these really encouraging stories about where we can be investing and where things are going to really help drive this industry forward. So I want to break these down here and kind of build the story about why productivity is so important to be focusing on, and it's a bit of a mind shift from where we've been looking at historically, I think. Okay, so I've been talking about the importance of this industry, and really want to kind of look at this. So we've done some reports and some research on it. If you look at what has where we've gone and where we are so far, the investments in crop production products, genetics, that side of the industry has been contributing significantly. If we look at pre-farm side of things, the industry is contributing about $1.2 billion in GDP. It's almost 6,500 jobs. It's really driving opportunities. This is increasing the value of crops that we're putting out through increased production, and then these are having major downstream impacts. But the so what out of this, and I think what I really want to highlight, is that when it comes to Canada, sorry, I'm struggling with the clicker here. When it comes to Canada overall, and we look at where modern crop production is and the value that it's driving here, it's, you know, if we didn't have these technologies and this investment, food prices in Canada would be somewhere between 25% and 65% higher. And that's really just kind of comparing that lack of productivity, the lack of increase in production that you guys are doing, whether it's potato farming, whether it's wheat production, fruits and vegetables, etc. food prices in Canada would be somewhere between 25 and 65% higher, meaning that Canadians would spend nearly $7,000 more on food just to feed their families now, as if we didn't have this investment. So there's a reason why we need to focus on this and kind of highlighting that point. If we kind of shift that storyline to for the livestock sector, the overall livestock sector is contributing almost $150 billion to GDP, where the number of people that are employing are quite significant. It's at high level of employment, and we're seeing almost $50 billion in wages. And these are spin-off effects, so not just direct to the agriculture sector, but how these things contribute beyond it. So when we look at these things are really important, and this is big business, and it's really important to Canada. And I think that's really what the major punchline is on this. So what's the so what? Why does this matter? Well, at the end of the day, when we think about this, if productivity is increasing, it means that we're going to have higher output. And when we can drive higher output, we're able to, beyond inflation, we start seeing wages go up and Canadians are better off. And that's really what the storyline is. The same storyline happens in agriculture as well. If we can start driving productivity higher, it means that you guys will be making more money than the cost of inputs and equipment going up, and therefore the farm will finally be feeling a little bit better. And what we have seen over the last decade is that we've been trailing on this. We are not getting the increase in the overall equipment or the overall output, and although we're seeing some pieces of the agriculture community growing and seeing some benefits, at the aggregate things have been tightening up, that we're really starting to fall behind as the input prices, whether it's chemicals and fertilizer or equipment, just as we heard, are really taking and absorbing all of those kind of pressures, and really the farm is starting to feel in a pretty bad spot at the aggregate at the moment, and that sentiment is declining. So what is productivity? And I think this is something that needs to be talked about, because when we talk about productivity in Canada, there's 5 or 6 different measures that people are talking about, and they all mean different things. So you hear about labor productivity, you hear about total factor productivity, and all of them are a little bit different. We're looking here at total factor productivity. So we're really looking at the amount of the inputs that are being used to produce a certain amount of good. So increasing productivity means that we have better efficiency overall, and as a result, we see driving higher profits, improvements in the economy, improvements in sustainability, improvements in the overall health of the sector and the agriculture sector here. So when we see this, it's really important that we're driving this and switching that. And one of the things that we do see when we've done some research is that there's a lot of confusion between productivity versus profitability. Profitability is a component of overall productivity, but it's thinking bigger, and it's kind of tying that into your business plan, tying it into those bigger objectives of the operation, so that we see that improvement in where we are. And when we see that, it's about investing not only at the farm level, but it's a lot of investment beyond that in the bigger structure that we need to be looking at here. So as I mentioned, when we think about productivity, it's really about driving these things. So it's focusing on profitability, productivity, which is one piece of it, and sustainability, and coming together. And achieving this really is about sustained growth that's going to feed overall Canadians. It's going to provide and funnel into that food and fuel and fiber market. It's about driving efficiencies, technical progress, and scaling up the production. I'll kind of get into those details a little bit more on what we mean and what that looks like. But the challenge that we do see on the productivity scale here is that we've seen major declines in the growth rates. Things are still improving, but not at the same pace that we've seen historically. So if we kind of look at that trend line over the last several decades, we really peaked in this 91 to 2010, where we saw the highest levels of productivity as the overall economy in agriculture, seeing about 2% per year. And if we kind of trend where we are going down, over the last decade, we saw growth of about 1.3% in productivity, and we're on trend to see somewhere in this 0.7, 0.8%, and we're less than half of the growth that we've seen over the previous few decades. And so this is where the alarm comes up and why we really want to be focusing on this story. And if you look at the overall Canadian economy, you see some similar trends when it comes to the productivity numbers. So this is where it really starts mattering. And you kind of look at what we see in crops, for example. You know, during the 80s, we saw really low productivity. We saw some major improvements in equipment and kind of call it these miracle stages. We saw the advancements of crop technology, genetically modified crops, et cetera, would really help produce the outputs. And now we've been on this steep decline in terms of these growth. And where we see the challenges here coming through, it's just that declining cycle. And this is where it's still just getting to concern, because when we think about how Canada is doing and we think about all the challenges, whether it's trade disruptions, whether it's low profitability, we're not gearing very well up to really help the next generation of farmers come through here. And this is why we need to focus on it. If we look at the livestock sector, I think it's a bit more of a sad story, because we did see some of these good times and some good growth, but it's a lot more up and down. And really, for the last 2 decades, and on pace for the 3rd decade, the fact that we're seeing an exit of producers in the industry, but we really saw almost a flatlining and a stagnation of that growth and productivity over these last 3, or kind of on pace for the last 3 decades. So when we think about the producers in the livestock sector, especially on the pork side of things, a lot of the beef producers, they've been really struggling on that. And we see this challenges moving forward here. And it's been more variable up and down. So the good years and the bad years are really weighing them down. And at the end of the day, the story's not looking that positive. So why does this matter? I'm talking about trends. I'm showing a bunch of charts. What does this matter to me as a producer, as a person in this industry, as a person looking to sell some of these new products? If we just take a look at where we are and where we're going. I mentioned that we're on pace right now over this decade to have growth of productivity growth of about 0.8% per year. If we can just get back to the long-term average and have productivity growth of 1.4%, this means that we'll have about another $18 billion in revenue generated for Canadian agriculture, for primary producers, for you guys in the room. So that's what a 1.4% growth rate in productivity means. If we go from where we are right now, that 0.06 percentage points higher, it'll be about $18 billion. If we can get up to $2 billion, the good years that we had, really driving growth and innovation, really driving improvements, hitting that 2% that we saw the previous couple decades, it means about a $30 billion increase over the next 10 years of revenue for Canadian agriculture. It looks like almost $19 billion in the crop sector, almost $12 billion into the livestock sector. So these are really big numbers. What does this mean on an average farm? It means about $150,000 in more revenue for your operation over that 10-year period. So I think it's enough money that it makes some sense, and it's something that we need to be focusing on. These are not really that small of numbers, and it has a big impact in terms of the health of the operation and the farm. So this is really what the goal is. This is what the objective is to achieve, and this is why it's important. The question is how do we get there, and why have we slipped, and what's the kind of the piece that's missing that's caused us to fall away from these higher growth rates? And I think the story's, there's a bunch of pieces that come into it. I also, just kind of building, what does this look like to achieve this 2% increase? If we look at the overall agriculture, this 2%, 2.1% what we're showing, in crop production, we need to be looking at driving growth of about 2.6%. In the livestock sector, because they've been stagnant for so long, we're going to be looking at trying to drive that closer to that 1.9%. So that's really the benchmark and the challenge that I'd put out there for the industry. And that's really important when you start talking to producer organizations, start talking to government, looking at your individual farm. There's no one spot that's going to make this thing happen. It's going to be that collective approach and partnering together to make these numbers drive to the areas that these goals we need to achieve the benefits. So when we look at this, there's kind of 3 components, and I kind of alluded to it before. And this is a production curve. And, as an economist, we love these things, and we can put some numbers on here and look at where these opportunities are. And so there's kind of 3 pieces of the production curve that you would want to focus on. The first part is just kind of this. increase and improvement that you see, they're more the low-hanging fruits, and that's really what we'd call technical efficiency. And what does that mean? That really is focusing on management. What are the things that we can do to manage our farms differently? And I think a lot of those pieces, you guys have been farming for a very long time. The knowledge has been passed on to the next generation, and obviously there's new things coming out, there's new technologies coming out that we want to learn. But those are the low-hanging fruits, and it's just kind of really crunching the numbers and looking for those opportunities. The next big part is this B to C. And this is the economies of scale, and that's really about matching up, the equipment that you have and growing your farm to the right size to match up things, and I'll go into a little bit more detail. And then finally, you have this technical progress, and that's the innovation. So what do we mean by these? So I talked about the small gains that we look at from the efficiency side of things, the management. And there's a whole bunch of people out there that have different theories. There's the 5% rule that people look at. It's making sure equipment's set properly so you don't have loss. All those little things, but each one of those little things really adds up. But the caution about that I would say is that when you're looking at those things and you're looking at management, take a whole farm approach to it. Because some farms are structured such that they have high labor costs and then their capital costs are lower. Conversely, other farms are spending a lot on capital and labor costs are quite a bit lower. But having that whole farm approach is going to be really important because there's no one right answer to it. But what it is saying is take a look at where you are, trying to crunch those numbers, work with partners, work with your accountant, work with different groups, financial advisors, your financial institutions, etc. But look for those small gains that you can find and how you're doing. And where you see your numbers kind of off of the benchmark, challenge yourself. What can I do differently? On the economies of scale, this is one that's a bit of a trigger, I find, in the industry, because I'm not saying that bigger is better. Now, for some operations, bigger is going to be better. But, I kind of think about it when you look at buying a skidoo. If you're never going to go to the mountains, don't buy a mountain skidoo. It's great to have it, but you have way too much machine for what you need, and it's really not going to be the most efficient piece of equipment that you're going to have for the fun you want to try. The same thing comes with your operation. You don't need to have the biggest equipment. Make sure that the equipment purchases that you're making align to your long-term business plan. So if you're not looking to expand, if you're making do with a 60-foot drill, then maybe that's the right investment for your operation. You don't need to get a 100-foot drill. You don't need to be scaling up everything. But if you're looking to expand your land base, or you're looking to expand your herd, make sure that your investments are such that that plan is coincides as part of the business plan. And we just heard the last presentation talk about the importance of used equipment versus new equipment and how offside that can get you on your operation in terms of your overall profitability. So this is an area to focus on quite a bit. And now finally the fun part. Well, at least the new part and the shiny part and the innovation. We're seeing a lot of really cool things. We've seen a lot of great things at the show here, talking about new innovations. We got some really good institutions, and Manitoba's kind of at the heart of it with Emily and some of these research farms, highlighting some really good products out there that are going to drive ROI. It's also the next frontier, I would say, in snake oil, because there's a new technology coming out every day, just like we saw lots of different things with, different nutrient packages, and there's always something out there to sell you. So trying to drive and figure where those ROIs are, but what are those innovations? What are the things that we can drive in our operations to really accelerate these growth? And so this innovation, these are why, places like Manitoba Ag Days are so great for seeing these opportunities and ask those right questions. But it really comes down to investment, and these are one of the things that we need to see overall. And if we kind of look at the scale here, now don't so much call out my numbers, but look at the trends. We see capital investments increasing as productivity or investments in income increases. We see more capital investment. And that's a, no kidding, dum-dum. Like, as you have more money, you feel like you've got some opportunities to make those capital investments. But are you investing in the right structure for the accelerated time of your growth in your farm? and making sure that we're looking at making these investments and driving those productivities even when we're seeing some of those challenges financially. So it's really that balance. You don't want to put the farm offside, but those are some of the times where we really need to be making those investments most so that we can drive these future opportunities. So if we kind of look at how we've seen investments over time and what it's really been around equipment. You know, if we kind of look at the 70s and 80s, we saw some major improvements in equipment and self-propelled equipment. So we saw some major investments there. We saw a lot of the challenges that we saw through the 80s and 90s, and that saw major declines in overall investment, especially on the tail half of that. But once we started getting into these precision farming, we saw bigger, better improvements in spraying equipment. From 91 through to where we are, we've seen some pretty positive investments overall in agriculture products and investments in capital expenditure. But a lot of those investments that we've seen and where people like to make those investments in farms is on the equipment, and make sure it all matches green or all matches red, but people like to have these matching colors. And that's where most of the investment is. But the opportunities that we see right now are really in some of the soft things. AI is driving a lot of these things, monitoring equipment or remote sensing types of things so that we get more data to make better decisions. And now we're seeing a new paradigm in terms of where those opportunities for investment are and how that can drive your overall farm opportunities here. But there's some other challenges that we see overall too. If we kind of look at research and development spending in Canada and what that's been looking like, these have been some downward trends. Now, whether it's checkoff funds that are coming in, those have been declining and making some really tough decisions for farm groups. Government expenditures on research has been declining. We see good spending in terms of capital projects, but then when it comes to funding these research farms, they've been struggling over time. So back in the 90s, especially when we saw new genetic technologies coming through, we saw really, really high investments in Canada. And we were one of the world's leaders in overall investments in research and development for Canadian agriculture. And that drove a lot of opportunities. You think of Roundup Ready canola, genetically modified canola, corn, et cetera, driving these opportunities. And now if you look at where we are as a proportion of the size of the economy in agriculture, we're one of the laggards compared to our peers. And it's really interesting that we hear some of the visiting parties here. Israel, for example, they're spending a significant amount of money. Japan is spending a lot of money in here and helping to drive these and seeing upward trends in this overall investment. So as we vote, as we invest, as we have the option for checkoff dollars, all these things are important to drive these innovations to move your industry forward. The other side of the story is actually investment, and we had Ray talk about some of the investment opportunities, but if you look at our venture capital investment in Canada relative to the United States, we're hardly keeping up. You know, we look at where we are, the U.S. is significantly higher, whether it's structural things that are coming into play, and you alluded to things like regulations. We are not getting the investment into VC. And these are going to be firms that are going to build products specific to what we need, moving these products forward, great ideas, great inventions here in Manitoba and the prairies, and driving these forward. So we need to create this environment that we're going to increase more of this VC spending to help drive the growth. You know, on the deal side of things, we're a little bit better, but when we look at it, the U.S. is about 27 times the amount of investment in VC to where we are in Canada, and hence we're seeing the decline in those opportunities. And then when we look at these overall things, we're kind of seeing this slow uptick in overall technologies. You know, we want to see investment growth in equipment, and that's one part of it. But relative to where we are in the productivity gains, we continue to be held back. And over the last couple decades, a lot of it's been on the price, but we've really seen this lack of investment for where we need to be going as an industry to help drive some of these growth. And this one here is getting to be a bit of a laggard type of a response, because we're seeing the investment type of opportunities changing so significantly beyond where we are from just hard equipment to more of the data, the tech side of things that wouldn't be classified in these pieces here. But here's here's a bit of the call out to the industry. If we look at how we're doing in terms of adopting new technology in Canada, and you think about, just because of grouping and statistic numbers, agriculture, forest, fishing, and hunting, we're one of the lowest adoptions of technologies in the Canadian economy compared to utility, scientific, insurance, which is at 70–80%. Agriculture is just barely into the 60s. So these are one of those things when we think about the opportunities and as new technologies come to market, they're really struggling to get adoption in here and people picking them up. And I don't know if it's the skepticism that we've had, part of it. Finance is another one. And then one of the other challenges that for so many operations, we get one production cycle per year. So the risk that we see in agriculture is just that much higher as compared to a manufacturing sector that's turning over these outputs every year. So this is something that we need to do a better job of from the research community in terms of really proving out that ROI. But I think it's that curiosity and making sure that we're attending forums like this and other forums to learn about these technologies to drive these opportunities and move this industry forward. So, I guess what the storyline is here is that there's a big gap in where we are in terms of the innovations that we are driving, the research and development that's happening in Canada, and how that's driving productivity. And we've really moved away from some of those opportunities. And at the end of the day, the challenge is that you guys in the room, the industry as a whole, is not feeling as strong as it has historically. We have some major challenges to accomplish over the next decade. You think about the consolidation of farms that continues to happen, and so many farms are getting bigger. And what does rural health really mean in Canada? And that's a government kind of a policy type of issue. But where do we go from there? How do we transition all this wealth over to the next generation? If the farm is not going to be healthy, we have a lot of assets right now that we're looking to generate, to the next generation. But how do we make sure that we have healthy farm operations moving to the next generation so people can make that transition? So all these things are kind of looped back into this story of, are we driving productivity? Are we innovating properly? Are we making sure that the farms are continuing to grow such that they can be strong and healthy for the next generation and really drive these overall successes that we want to drive and really meet the needs of your operation? I lost my screen here, so I'm kind of looking back here a little bit to see where I am. As I mentioned before, there's really 3 pathways that you need to be looking at your operation and kind of scaling that with your business plan. And that's really looking at those technical efficiencies, and those are the easy ones that you can be doing. And this is a time of year where you're really starting to look at your numbers, looking at those economies of scale, and is there some things that you need to be capturing? Or maybe are there some things that you should be looking at scaling back? And then what are those opportunities to foster new innovation, to adopt in your operation and move the needle forward so you can capture that piece of that pie, that $30 billion that we're looking to achieve. So overall, I know we're pretty close on, a bit more time here in terms of where we are, but I think this is a topic that we really need to start focusing on and shift our attention to. As we start seeing costs rise, margins declining right now, this is when people really start asking a lot of questions. There's not as much kind of wiggle room in the budgets, so cutting back inputs are one thing that helps drive it, but are we able to still produce that overall, push that limit in terms of the opportunity and where we're going there? So thank you very much for your time, and I'll be around for questions if there's anything or challenges that people might have.
Thank you so much, Craig. He finished early and I just popped 2 mints into my mouth, and now I feel like really it's a faux pas to have done this, but I'll try not to do too much ASMR for you folks. Do we have any questions? Because I have a couple of my own, but of course I want our audience to have first opportunity for questions for Craig. Okay, so if anybody is cooking up a question, or maybe my question will draw some more questions. You focused a lot on productivity and innovation within your presentation, and given our current geopolitical kind of, what's going on, a lot of uncertainty, access to export markets, trade barriers, things like that, and how that really has a profound effect on profitability. How do you, like, what is the focus, or can you just maybe shed some more light on the focus in your presentation on productivity and innovation, given, those are the risks we're facing right now?
Yeah, I guess that's a really important question. When we think about the kind of the dynamics of where we are in the trade environment, there's the near-term stuff that's really easy to see, and we, look at the trade dynamics that we have with the United States. But trade has been something that's been deteriorating for quite a bit of time. For everybody that's in the beef industry, how much beef have you been moving into Europe? That's been a really good trade agreement that we're supposed to have access to, but we're starting to see these trade tariffs coming in other forms. It's not just the pure tariffs that we see in the United States, but we have green ones. We've seen tariffs resulting around treatment of labor, and we've seen some of those with China. So the whole trade dynamic is getting to be much more complex than it has been historically. But I think that's where the opportunity, in terms of, as we can create an environment for investment, it's not just at the farm investment that we need to be doing. There's kind of this energy nexus that's out there. When we think about the agriculture products that we're producing, it's not just food, it's fiber, and it's energy. And so how do we create an environment such that we're driving and attracting that capital? So we're finding new markets, both domestically here as well as in the international markets. And what we've looked at from a food side of things is that there's about a $12 billion opportunity just to be finding and shifting new markets of the expertise that we have here. And so it's a culture that we need to be driving here beyond just looking at the farm, but level that up in terms of where the industry is. That's why it's really important to be proactive and involved in the producer organizations, whether it's the crop organizations and canola council or the beef organizations, hogs. All these things are very, very important, and have that strong voice to try to attract that capital and really show that Canada is here to do business. And as we can increase some of those, we can diversify those markets, and we can create some more homegrown opportunities domestically as well.
Excellent, thank you. Do we have any questions from the audience? Because I do have one more, but if we have one, I'd be happy to run the mic.
It's quiet.
Oh, shy. It is the end of the day, so I do understand. I have another question. As we move into thinking about the next ag policy framework, do you have anything, any thoughts on what, given, again, the world we're living in, a new reality based, that's very different than 5 years ago? Do you have any thoughts on things that should be considered in the next ag policy framework? Well, that's a loaded question.
Yeah,
I'm so sorry.
But I mean, when we think about some of these policy side of things, I think we need to look at risk holistically. And what are there's some risks that we can take more ownership on the farm and really protect against those. And those are the things that we kind of want government to stay out of our lives on some of those. And then there's these other things that are externalities that are really difficult for us to see. With some huge shifts in weather, those things are things that we can't have or can't really address. And these, whether it's getting feed or it's producing the crop, these are some things that we really need that next framework to be putting forward. But I think when we look at the framework, it's like, well, how can this framework be designed such that it moves the industry forward? We've had incredible success doing what we've been doing. We've seen lots of growth in terms of outputs, and farms have done, some farms have done extremely well off that. But in some ways, we're at this kind of crossroads of where the industry is going. So is the old way the right way to move forward, or are there some new opportunities to kind of adjust this policy to really drive innovation and really drive that industry forward? And I think when you look at the outputs of farms like Emily, some of these smart farms and innovation, some of the great work that we're seeing on the livestock side of things, it might be worthwhile looking at what they're driving and how do we get those things adopted and maybe get this industry to up itself and up the game so that we're better able to meet these different challenges, whether it's climate resiliency, whether it's going to be the fluctuations in terms of production and just income stability. So there's a whole bunch of different things. I don't know what the right answer is, and I think that it's that combination of people being active and participating with their groups to share that story But I think we need to look at risk holistically a little bit differently and figure out where we need to go, and then what are those opportunities that we can use this, it's a very expensive tool from an economy side of things in Canada, so how do we use that the most effectively so we're really upping the game of farmers and producers here in Canada? And it might not be a one-size-fits-all, and that's some of the things that I think the industry has really been challenging with. So what's fair versus maybe equitable all the time, so we're really driving progress, and I hope that those kind of become the conversations that we're looking at behind the scenes there.
For sure, as always, the real answer lies kind of in the messy middle, doesn't it? It's very nuanced, it's complicated.
It is, but I think one of the things that, when we look at the industry, participation in terms of young farmers has been declining. And, people are busy, and I get the demand on time, whether it's for family purposes, the business of running a farm, but, whether it's, investment of your time in Keystone or pushing these things forward, those are going to be so important to driving that message. And it's really great when you see people be a part of it. But it's also about encouraging and maybe making the investment on your own farm to make sure that you can have some of that resources going into it as well. And I think that's underappreciated, I guess, at the aggregate.
Yeah, I totally agree, and I think, a mantra that I've adopted with myself when it comes to participation in my own industry and things like that is, and even other parts of my life, is we are short on time. We don't have time is a very easy default thing to say, but I've kind of taught myself to say, that's not a priority for me. Ooh, and if I feel a little yucky when I say that, I actually probably do have time for it, right?
Yeah. I would agree. And, it's an investment for the future of this industry. And, we need some of these great minds, people that are running some of the, the best farms. We need their time. And you do see at the business level, some of the businesses and biggest operations are the people that are the most active. And, it's because it matters. And they're seeing that vision. So, sometimes it's just that public good that we need to do.
Totally. Do we have any final opportunity for comments, questions? And will you be available on the concourse at all to chat? Okay, wonderful. So great. Craig says he's going to hang out a little bit longer. If anybody wants to take this offline, that's totally great. And I just want to say, a huge thank you for your sharing your time and expertise here today. In lieu of speaker gifts, this year Ag Days is making a donation on behalf of all of our speakers to the Manitoba Farmer Wellness Program. So many thanks to Craig for sharing his time today. Many thanks for all of you for being here and sticking it out to the very end. If you are pursuing CEU credits, continuing education credits, please check at the back of the curtains at the concourse, and you'll be able to sign up for those there. Thank you so much for being here. We'll be back again tomorrow morning, and I myself will be over in the MMP Theater in the afternoon, but please, we'll see you tomorrow hopefully, and if not, stay warm tomorrow, and thank you for coming.